Let's move along to the appropriation section of the income statement. This is the account where the profit sharing is calculated. Now, the profit sharing will be in the partnership agreement. Let's have a look at our income statement. So we'll start from our gross income. Then we will less our expenses, and there we can see all of our expenses listed. If we add that up, we'll get our total of expenses, and then of course afterwards we will calculate our net profit. And then after we've calculated our net profit, we will start with our appropriation section. So our appropriation section starts directly after we calculated our net profit. An important point to note is that the interest on loan is not recorded in the appropriation section. It is, however, recorded in the current account. So please pay attention to that. Another thing to note is that partner salaries and employees' salaries are accounted for differently. For instance, your partner's salaries will go in the appropriation section and the employee salaries will go in the profit and loss section. Now let's move along to the appropriation section of the income statement. Well, first we'll start with our net profit, which we calculated in our income statement. Then we'll add interest on drawings. After we've added that, we will subtract salaries, interest on capital. We will add those two, the 1,800 and the 16,200. We'll get a total, and then we will subtract the total. And then the 3,900 is what's left over, and this is the profit that needs to be shared between the two partners. And then each partner will get a share of the profit. Now let's have a look at how we would calculate each of these items in the appropriation section.